So Apple just declared it is doing a 4-for-1 stock split. What does that mean? Find out up next on Real World Investing. So on July 31st, Apple announced that it is splitting its stock. What does that mean? This is the 5th time in Apple's history that they are doing a stock split, and I'm here to help us figure out how we can take advantage of this once-in-a-lifetime moment. Stock splitting is a relatively common thing for successful companies, some of them including Microsoft, Apple, Nike, and Coca-Cola. So what is a stock split, you might ask? Essentially, what a stock split is a company wants to increase the number of shares in circulation of their stock. So what they're going to do is decrease the amount of money that the share costs and give that out to the investors in new shares. For example, Apple's sitting at $450 right now, and they're doing a 4-for-1 stock split. So the price of Apple stock is going to get cut by 1/4, and your stock that you are currently holding, if you own 1 share of Apple, would be increased to a grand total of 4 shares, giving you an additional 3 shares. So is a stock split a good or a bad thing? Well, technically it's neither. Nothing's really changing. There's more shares in circulation, so the price becomes cheaper. Nothing changes besides that. But let me explain to you why this is a good thing for Apple. Apple is known around the world as the tech giant, always innovating. They are the leading developer in phone software, and they are always pushing things forward in the tech industry. And when a new person is investing, one of the main stocks they're going to go look at first is Apple, Microsoft, and Nike. By doing so, you are seeing Apple at a much more affordable price. So instead of $450, and the average investor is going to say that's way too much money for me to put in, they're seeing it between $100, $150, and it's going to make them feel more comfortable about putting their money into Apple, because the average investor is seeing that and going, I can afford that, let's go pick up a share or two. How can the average investor benefit off of something like this? Let's take a look at 2011 when Apple last split their stock at a 7-to-1 split. As we can see here, when Apple announced their split, they went on a completely positive run up until the date of the stock split, implying that if you had put your money in before the split, you had made a really solid return already going into the split, allowing you to make even more money once the date occurred for the stock to split. If we take a look at Apple currently, it has been a week since they have announced the split at the time of recording this video, and they are currently trading at up 2.8%, implying that Apple will continue the trend that we saw back in 2011. All right, JT, so you're saying that I need to get my money into Apple before it splits its stock. That is what I'm saying. Exactly. But what if you don't have enough money to buy a whole share of Apple? $450 is a lot of cash. Not everyone can fork out that much. Let me explain to you what fractional shares are. Without getting too in-depth to it, let's take a look at Apple stock that I currently own. I currently own 3.38 shares of Apple, implying that I don't own 3 and I don't own 4. That's what we call the fractional share. I own little under half. So that's the really cool thing about Robinhood for the average investor. There's no stock that's out of range for you. If you're using fractional shares, you can invest with as little as $1 into a company and start benefiting off of them. So no matter what stock it is, i.e. Apple or Amazon, you can still profit off of their success. The day is here. The stock is splitting. What do you do now? Do you sell it? Do you buy more? It's a simple answer. You buy more stock in Apple. Apple is one of the leading investors in the world in technology. They are always pushing for the next thing for the consumer to buy. And guess what? The price is now below $200. So the average investor is going to see that and say, I can afford it, and they're going to buy it. And the cycle is about to continue, causing the stock to go back up. And now, next thing you know, you're making a ton of money off of Apple. Now allow me to sum it all up and kind of just tell you what you need to do for this. Again, this is just my advice personally. I'm not a professional investor. I can't tell you how to manage your money. But at the end of the day, the quicker you get your money into Apple, the quicker you'll see a return. By just owning Apple, you have already won.